Good morning, everybody. How's everybody doing this lovely Wednesday morning? Going to do a quick recap of what we looked at yesterday this morning, and we're going to have a look at the news events for the day and have a quick scan through all the charts. Look for any opportunities on the hourly and 4-hourly RSI extensions, and just have a look through everything and just see if there's any good opportunities at support and resistance as well that we can trade off today. So that's the plan for the morning. We'll start off, just a quick recap yesterday. I traded some S&P yesterday and NASDAQ. I put the results in the Telegram group yesterday. But basically, where are we? Let's go to 15 so we can see it. Can't see it. Obviously didn't drag all those trades onto the chart. So had a couple of positions from yesterday. Top of the morning to you, Peter. Top of the morning. I'm useless at accents. So yeah, had a couple of trades on S&P yesterday. As we pushed down, which got out of there, and NASDAQ had three positions, one there, took an accidental position there which I scratched and got out of those two there. So after the push down on NASDAQ yesterday, we've just basically got into a nice consolidation. Morning, David. So yeah, no movement on that so far this morning. We'll have a quick look at the NASDAQ on the higher time frames and S&P. So we've pulled back into potential support at the 24 moving average on the daily. 72 obviously is the next stop if we are going to put in a deeper retracement and then further down from there. Obviously you've got the 200 on there as well, but so looking not too bad. Morning, Iva. Potentially today we could get a bounce. So I was looking, obviously yesterday I said we were looking for a retracement, which we got. Whether that's a deep enough retracement is undecided obviously at the moment. We have hit 38 retracement on the NASDAQ. S&P, I've got enough one on there already. So S&P, we've retraced hardly anything at all. So the S&P, I think, has got potential to come down a lot more. It's just interesting that the NAS yesterday dropped quite dramatically compared to the S&P. Usually they kind of go together, but obviously there's a lot of the tech sector scaling out yesterday. A lot more than the rest of the stocks. So we'll see what happens with it. But could well get an update today on the S&P. I'm just holding fire this morning. I'm not going to trade it, I don't think, this morning. If we get a decent drop down to these lows, I might get into a position. NAS I'm not really interested in at the moment. I want to see what London does, but it's a fairly decent Asian range on it. So we'll see. So yeah, that's basically those two. That's all the trading I did yesterday. I'm keeping my powder dry at the moment because it's the first week back after the break. I want to see what the market does. I want it to establish itself. Jason, can we have a look at US 30 when you get a chance? So US 30, obviously new highs put in. I don't actually trade this, so difficult really to tell. I mean, similarities obviously are going to be there with the S&P and the NAS. You long it because it's the obviously the top 30 stocks. So the reason I don't trade this is because it is more volatile. It gives you more opportunities to get in on pullbacks, but there is a lot more volatility on it, which is why I prefer the S&P. But saying that you'd be looking to long it. This has made new highs. So, I mean, like anything, you wait to get in on a pullback. At the moment, the most recent move we've got, let's have a look at the previous move. Let's see what we got. See, we haven't had a pullback on it yet. I would say, like the others, we are due a pullback on this. This is the area here, which is going to be potential support. Did we tap into it? Yeah, we tapped into it there, look. So we have tapped into support. Not quite near as damn it. It's difficult, isn't it? But I would say it needs a bit more of a pullback, really, before we power up for any more movement to the upside. So I'll be looking for shorts on it today. Look at the wicks up here. It's very, very wicky at the moment. There's a lot of selling pressure up here. But obviously the main move's going to be made in New York. So I'll be waiting until then. But yeah, shorts probably on that one as well. But as I say, I don't really trade it. So, but it's very, very similar. You see how choppy it is when you look at this. How much chop you've got, how much sort of red to green to red to green to red to green you get on that, as opposed to with the S&P. It's much smoother, and the NAS it's much smoother, which is why I prefer those two. But they're all the same. They're indices. They're designed to manufacture to go up. Therefore, they go up. You long them. If you want to short them, you can short them obviously any time. But your shorts are obviously going to be way more dangerous because you're going against the long-term expected trend. So when you get into a long position, you've got much more chance of the market moving with you and it being engineered for your position to work. Whereas shorts, obviously, they are a lot more risky to take. But as we saw yesterday in the Nasdaq, they work absolutely fine. They're just more difficult to predict. Pullbacks. With mean reversion trading and pullback trading, trend trading, you've got moving averages to support you all the time. So you've got an area where you are expecting price to move from. It's very difficult to project when price is going to start a pullback. And typically you look for support and resistance areas. With something like the Dow at the moment, we're out in the middle of nowhere. We're out in no man's land. We haven't been up here. So there's nothing that you can predict from historical price action to say when this is going to come down. The reversal alert indicator will give you an indication of when market structure is breaking. You've just had a nice M pattern break there. There's a reversal alert. And it's now retesting that reversal alert, looking for a down. So this is really all you can use to tell you that market structure is shifting. But whether that shifts or not, we've just had a reversal alert back to the upside. So, it's difficult. But yeah, I would look for a pullback on it personally. But as I say, it's not really an instrument I trade much, so I'm no expert on that one. Right, okay, so let's have a quick look at what we've got today. News-wise, it is a big day. We've got non-farm at 1:15. Non-farm employment change, not non-farm payroll. So there will be some market movement this afternoon. That is pre-New York Open. So obviously for S&P trading and indices and things like that, obviously you're going to get some movement pre-market open today. We've got building permits for the CAD at 1:30, which won't do a lot. Just be aware of it if you've got any CAD positions on. And then FOMC this evening at 7 o'clock. FOMC is very, very hit and miss. It will either go mental or it will do nothing most of the time. You just need to be aware of it. Any positions you've got on which are specifically US dollar based, but FOMC can move all currencies. So just be aware of that. 7 o'clock this evening, UK time. We're going to have FOMC. So just be watching positions. I always have my tablet open when I'm sitting downstairs watching telly, just so that I can take profits on positions or react and enter additional positions if there's a spike. The FOMC spikes quite often are temporary a lot of the time. So you'll see these big moves where we get a big spike down and then you get a huge retracement back up. You see V-shaped and A-shaped recoveries on FOMC a lot, and quite often they'll do it in one candle. But they can have fundamental impacts on the market. So you will see FOMC sometimes they will announce something that was unexpected, which will indicate a rate change or something that is going to happen ahead of time, and the markets will change their fundamental views and change their scorecarding accordingly, and then all of a sudden you will have a shift which will change direction in price, and you'll get a new directional trend starting. So just be aware of that today. We've got news obviously later. Then tomorrow we've got services PMI as well. So looking at the news yesterday, obviously we had negative news on the US dollar with manufacturing PMI. We had a nice decent down move on that one, nice reaction. Price has pulled back. Today it looks like it's wanting to drop again. Obviously it's early doors, but we had some decent reaction from these buying areas here. So this nice consolidation we had this big propulsion move out of that area during London, which was continued in New York. And this is where all the buying action was. And as you can see, it's come down, tapped straight into it. So although that was negative news, it's not guaranteed it's going to have a negative impact on the US dollar. So we may well be just in a supportive area here at the moment, looking for a move up. But as I say, I think we are going to get a move up this week. It's just whether or not it's going to happen on FOMC or whether it's going to happen with non-farm payroll. I think they're going to use one of those as a catalyst this week to move it. So what I'd like to see happen this week is the US dollar pull down a little bit further to get some more down moves. It's quite possible this week's play, as they've just taken out the liquidity here from all this buying. This area here obviously is where all the selling pressure came in. Sellers pushed price back down. They took the liquidity from that area there. What I would like to see, if possible, happening over the next 2 days is a push down to the lows to take that liquidity. That will power the US dollar up to make a move this week. I don't know if that's going to be possible this week, if there's going to be enough power in the market to get down there, but that's what I'd like to see happen. But at the moment, we've obviously got this big propulsion move from Monday, which was more likely slippage because it was a bank holiday. We've got this big propulsion move here, which has left this nice big gap where all the buying was happening. The buyers seem to be defending that area, as you can see, very heavily right now. So it could well be that this is just where we're going to start the move from. In which case we're looking for longs on the US dollar. But as I said yesterday, this is a very difficult week to trade. We've had a bank holiday. There's been light liquidity and slippage. We've just come out of the 2-week Christmas break. I really want to see the market establish itself and decide what it's going to do. Any risks that you put on the table this week are going to be a little bit more risky than normal because we don't know which way they're going to want to take the market initially. So, hi, Handyman. Nice to see you. Welcome to the stream. First time here. Okay, so US dollar index. That's kind of what happened yesterday. It's looking very bullish at the moment. We were looking bearish, but it looks like London is starting to reverse that. So we'll see what happens. Just going to monitor it, as I said, for the first few days of this week. Right, so yesterday, massive movement on the yen. All the yen pairs went absolutely crazy. The RSI dashboard was lit up like a Christmas tree yesterday with the yen pairs. We had 200, 300% ADR moves across the board on yen. Absolute destroyed the yen was yesterday. All of those, obviously, we had this is the move here. Obviously, you can see Aussie dollar yen, for example, put in a 135 pip on a 77 ADR. So, 2 ADR move, 200% ADR move there. ADRs all over the place. We did get to highs and obviously started rejecting. So we got reversal alerts, as I posted in the Telegram group yesterday. We got reversal alerts on all of these, most of these, towards the end of the session yesterday in New York. If not, Asia seems to have done them today. But it doesn't seem to be dropping off and weakening particularly. So all of these at the moment, so you've got the reversal alert there and it's moved down. So we had decent movement. You had 25 pips you could have got out of that. On the Swissy, your entry was there. You got sort of 20 odd pips. Not a great deal. I would expect a much deeper move on that. So today, any of these that you got into yesterday on the ends for shorts could well play out very nicely. So any yens that you've got, stick a fib on the entire move of yesterday, or if it's a longer move, like the pound yen, I think is a much longer move. Well, it's from the day before, but put a fib on this last move that we had and look for areas where we're likely to retrace. So if you're short on it, look for areas that we're looking to target. So 38, 50, 61.8 retracements, and any decent gaps that we've got. So here, for example, between the 50 and the 61.8 would be an ideal place to take profits. Difficult, as I say, at the moment to have a bias as to whether or not this yen weakness is going to continue. If it is, we're going to probably look for a bounce. If it isn't, and it was just a temporary move to manipulate the market, which is quite possible, we'll see this come all the way down, which will require obviously some massive weakness on the pound as well as strength on the yen. But all of these basically started to roll over. We got reversal alerts on all of them. But so far in Asia, they didn't want to do anything with it. So it's down to London. London looks like it's opening bearish across the board on everything yen. So it looks like we've got some yen strength coming in on the London Open. So good potential moves down today on all of these. But as I say, it's just not for me. I just want to see what happens with the market at the moment this week. So US dollar yen, we obviously didn't get a reversal alert on 15. On the 5 we did. Which would have been somewhere around there as well. So lots of targets to the downside. As you can see across all of these, there was such a lot of movement yesterday. There's gaps opened up everywhere. So all these little volume pockets where we had the propulsion moves out and left these gaps, they're all targets to be filled. So look at all the time frames and look at where the gaps are. And that's where you should be aiming for if you're shorting these at the moment. So today, so far, obviously we had a lot lit up on this yesterday. We had pound New Zealand lit up yesterday as well, which was extended. We pulled down very nicely. We're back up at these highs again. Pound yen is still extended, obviously, after this move. So this is obviously the big move on the pound yen. This is my favorite at the moment for shorting. This thing's got such a long way to drop to even get to a shallow pullback. Shallow pullback I class as a 38 retracement here, which is this nice area of volume, nice area of balance that we had. That is where I would be looking for target 1 on that. Target 2 being the 50%, which is where we got this propulsion move out of it as well. And then we got this kind of double top here at the 61.8 retracement. So shallow pullback, medium pullback, deep pullback. A-shaped recovery, obviously, would be absolutely lovely. But this looks absolutely beautiful. Still extended above 70 on the RSI. So we are still well extended. But obviously we had this big, strong move during the light liquidity during Christmas, which has obviously helped this get much further than it normally would. But either way, all the buyers here have got to take profit at some point, and that big profit take move is going to bring you down very, very quick. So looks really, really good. It's looking fairly heavy at the moment. The pound yen, we had this high put in. We haven't had the reversal alert on the hourly yet. M15 we have, as I said, and we've retested that, and we haven't broken back above those highs. So new market structure looks like it is forming out of these highs. Got a new low. Well, you could class that as the low, then the high, then the low, then the high, then the low, and we just keep going until we get down to wherever the market wants to exhaust itself. So looking good. Pound yen, really nice spot to get in right now, actually, because we just retested again the recent reversal alert. Lovely target down there to aim for. So that would be around about ADR as well. So that looks really good still. US dollar yen looks really good still as well. On the 4 hour, massive movement. We haven't taken profit on this one either. Very same story. I mean, you can take the move really from here you could also take the entire move, which started sort of end of November. So you can see the targets we've got down here for a pullback. This is the area I highlighted yesterday, which is the potential problem area, because we've got a gap here after this move. This is where that big strong move started, which was the breakout of here. So there is potential for it to bounce here, but any of these levels down here are going to be good areas for support. By the time price has ground down there, if it's going to the 24, will have caught up, in which case then that is probably what is going to propel it higher. But as I say, we are non-farm payroll week. We've got FOMC. There's all sorts of stuff that could happen this week. So it is a dangerous time to trade. So just be very, very careful if you are taking shorts on the US dollar at the minute. I much prefer the pound yen, because the pound yen has a negative bias on the COT. So the other thing we've got extended is euro pound on the 4 hourly. This one, obviously, pound euro, we've been short forever. I've been short on the euro for ever, basically. If you look at the COT report, I've been short on the euro pretty much since March, nearly a year now. Wanted to do nothing but short the euro. It's looking for opportunities to short it, which is the difficulty, because it's not having that many pullbacks. We started to get some decent pullbacks happening, and obviously it's been battered down. So I've been looking on H4 and H1 for extensions above RSI to try and get in short, and it's just not really letting me. So you can kind of short this whenever you want. At the moment, we've just taken out new lows here. So this is a nice area of support. We got an initial bounce at that support, and it went straight back up into previous resistance and got rejected heavily. So again, same thing. It's market structure and support and resistance. Comes back up to here. This is a nice gap. Short it out of there. Failing that, you've got another gap above, which they may enter, and then short it from there. By the time it's got back up to there, the 24 will be coming down on top. The 72 will be coming down on top. So, just keep shorting it whenever you want to, really. I like to get RSI extensions, as you know. There haven't been any since beginning of December. I took this, got out of that. So it's up to you if you want to wait. If you want to be aggressive, you can kind of get in anytime you like, really, short on this, on any pullback. Just look at areas of support and resistance. Take reversal alerts. So if we get up to this area here, flip down to lower time frames, go down to M15, wait for a reversal alert to kick in, like that one you would have had there, and take the short trade. So monitor it on the 4 hourly or the hourly. Support and resistance areas. 4 hourly is better for support and resistance. It's much stronger, as you can see. So yeah, shorting. But at the moment, it's extended to the downside, so you don't want to be taking shorts on this at the moment. So you're looking at the moment potentially on a pullback. Some pound weakness. We're due some pound weakness, basically. If you look at the pound, we've had a fairly strong push across the board on the pound. Yeah. So the pound is due a pullback. And obviously a pullback on the pound is going to make the euro pound go up, and therefore you'll be shorting it on the next strength on the pound. However, the pound has flipped short on the COT report about 6 weeks ago. So the market isn't actually that bullish on the pound at the minute. But everything's going to be stronger than the euro. Literally, you pick a euro and just hit the short button on it anytime you like. If you get in wrong on the euro, if you get in up here and you're wrong, get in again and you'll be right. Yeah, just short it. Whenever you see a pullback on the euro, you short it and you get in. So RSI extensions to the high on any euro pair, all over them. Until the euro come out and say something fundamental that's going to shift bias on it. The eurozone is stuffed. At the moment, from a financial perspective and economic perspective, there's no reason why it will go up. It could well hold. We could have, accumulation phases on the euro and nice balance areas where we're going sideways on it, but not looking to long anything euro. Hourlies. So that's all that's set up on the 4 hour at the moment. US dollar yen, pound yen, and euro yen. On the hourlies, nothing. We're flat. So there's nothing alerted on the hourlies at all. So all the stuff that we had extended yesterday, which is everything that was extended on the 4 hourlies, obviously was way more extended on the hourlies. All of those have played out. Things like the pound New Zealand. We got the hourly extension here, and obviously that has pulled back. But at the moment, it's just retesting. So lovely reject. Look at that. Beautiful. We'll flick. I'm going to quickly flick through all the charts in a minute and just have a look at support and resistance areas. But pound New Zealand, beautiful rejection at the highs there. Pound looks like it's coming down today. Unless that is New Zealand dollar strength. Yeah, let's look at New Zealand dollar strength. So we got New Zealand dollar strength coming through at the minute, which is why pound New Zealand's reacting like that. But that's a lovely looking wick. Shows weakness in the pound as well. There's no opportunities there. Obviously, nothing's hit ADR today. Market's exhausted after yesterday. So much volume went through the market yesterday. It's going to probably need a day to chill for a bit. Just going to quickly whiz through all the pairs and look at anything that is getting to potential support resistance areas for entries on lower time frames. Basically, the best way to do this is look at the 4-hour charts. All I'm looking for here is anything that is getting to areas of interest. So, for example, going back in time, if we were looking at the chart around this area, I'd be saying, right, okay, we're hitting a double top resistance area. Look for shorts on lower time frames. Okay, so that's all I'm going to do is just whiz through all the charts. Aussie dollar CAD. Difficult to call that one. Not really anything of interest there that I can see. Aussie dollar Swiss, we're holding on the 24 moving average at the minute. This consolidation period that we've been in for the entire Christmas period, we haven't gone anywhere. So we are still sitting in that. This is a massive accumulation phase here. Okay, so obviously the way the market works is it sits there and accumulates orders and then manipulates the market to make money in either direction. And then it will sit and accumulate, move. That's basically what it does all the time. We are in a big one. So there is going to be an explosive move out of this at some point. Which way it's going, couldn't tell you. It's going to be reliant probably on the Swiss franc. We've got no Swissy news coming up at the moment. So very difficult to call this one. But it's in a lovely accumulation phase. Aussie is officially a short. From the futures perspective, there's more shorts than longs. So you would expect the market potentially to take it short, which would be nice because usually you see the Swissy powering up, which is what drives any Swiss pairs down. So I would expect it's a lovely short at the moment, but obviously price action wise, it's virtually impossible to trade. So on this one, you'd be looking for any reverse alerts up at the highs. I'd be more inclined to do shorts than longs on it, but nothing really interesting on that one at the minute. Aussie dollar, New Zealand dollar. What moving averages are these? I'll go for the moving averages in a minute, Kenneth. Aussie dollar, New Zealand dollar. We are tapping into these highs. So this is in a really nice area for shorts at the moment. It's a long. From a moving average perspective, but it's really actually in a horribly choppy, struggling to go higher consolidation. If you look at the support and resistance on this pair, this area here, we've had lots of reaction at it in the past, and we are there now. There's a massive reaction. Look at the wicks on the daily, where we are at the moment. This thing is not interested in going through 106 level here. So we've had a triple top rejection. It's just been sitting sideways for absolutely ages. We just tried again today to get through and it's been rejected again. So this is a beautiful rejection area. So if you want to drop down, just had a reverse alert right now, Aussie New Zealand short. So I was going to say, if you want to drop down to M15, next reversal alert, and that's a fairly decent propulsion candle in there, is a really nice short. So you can either just go short under there, sell stop. I'm just going to leave that one in place. Might well play that. or wait for the retest alert off of the indicator. So if price sort of comes up and then the next break down, you'll get the reversal retest alert, getting short. Target, obviously, at the moment, target would be these lows, somewhere around these lows, or this propulsion gap on M15. We did test it, but we haven't really come down and got into it. So if this is an area of buying that is going to hold, the buyers will probably kick it back from there. So that would be TP, kind of TP1, if you like, and TP2, somewhere around ADR low. So nice little opportunity there on Aussie New Zealand. On the hourly, it's the same gap. Another decent gap off of this this low. So Aussie New Zealand is kind of a neutral pair at the moment. Aussie is a short. New Zealand has just flipped short on the commitment to traders report. So they have scaled out of the longs. But I don't necessarily think that is going to be something that's sustained. So these two quite often will move in tandem, as you can see. I mean, it's really easy to trade Aussie New Zealand. It's not got a great ADR, but look at the movement on it. Yeah, it doesn't really matter if you hit the buy or the sell. You never need to hit the buy or the sell more than once or twice to get out of a position in this. So if you get in short here and it does decide to push up to a new high, you get in again and you'll get out here. If it does push down, obviously you're out immediately. But it's really, 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 really choppy. So nice and easy sort of trade on that. So I'll leave that one on. Quite like the look of that Aussie New Zealand today. Aussie Yen. Again, yen pair, not interested in yen pairs until I've really figured out what the hell yen's up to. But there's a lot of money, obviously, flooding out the yen at the moment, which would indicate a sort of risk on sort of bias for the market. So there is potential for it to continue to grind up Aussie yen as we see more yen strength coming through. I think initially we've got a nice pullback on this one. But looking at support resistance, you can see where we've tapped into. This is a massively strong area here. We came down to it, couldn't get through. We've tried to wick through it. We eventually broke it, tried to bang through it a couple of times, couldn't get through it, came up, massive bearish engulfing rejection from it before we started the move down. This is the first time coming back to this area since November. So it's obviously rejected again very, very nicely. So it's either going to hold or it's not. So yesterday was the entry on this one. Actually, no, this morning was the entry on this one. You see we've had a triple top attempt at it. So this looks like a lovely looking short opportunity at the moment. If it doesn't hold, obviously you just look at next areas where we're likely to move from, which is that propulsion gap there and there. So pushing up and pulling back out of one of those two areas there. When you get up to this area here, you're entering this big area of balance and accumulation. So the market will tend to do the same thing there. So if you get into positions, this is where I use my aggressive drawdown control. So if you're getting into a position and it's taking you into drawdown, when you get up to one of these accumulation areas, you'll tend to find a new accumulation will start and you just do aggressive drawdown control in that range to get yourself out of the position if necessary. But yeah, that looks really good for a short. Nice area of potential resistance there. Aussie US, we've kissed the 72 moving average, bounced off very, very nicely. We're still in the 72.24 zone at the moment. Aussie is a short, US dollar is a long. This is a lovely, lovely, lovely looking short. So really nice to, I mean, the short was obviously on Monday. You wouldn't have got that unless you were working bank holiday, which not many of us were. But we had that big, we had light liquidity obviously on Monday. We had a lot of slippage. So we had this big push down, which they've just corrected. So yeah, looking good for shorts. We've just pulled up into this area of support. So we got this area of resistance. We managed to crack it. Finally acted as support. We've now got through it and it's now resistance. Back down. Gaps to the downside. Actually, that's been filled. Scrap that one. So targets to the downside here and obviously this area of potential support. So yeah, looking good for shorts on that one as well. Aussie US. CAD Swiss hugging the 24. So again, push down on that one. We're in a bearish move on this one, obviously, as you can see at the moment. So yeah, any pullbacks to the 24. If that fails, you've got this gap here, which will be at the 72, which is likely your next reaction point. If that fails, huge support resistance zone here, which will be your third entry short. CAD Yen, that's just come off of support resistance, already happened, probably missed that one. Yeah. That's obviously retested and gone. But I mean, if you would go up to a higher time frame, we haven't had a reversal alert on this one yet. So, you know, but these are yens. Just be very careful with yens at the minute. The yen has a habit of squeezing really, really hard, which is why I don't trade it with the EA. Because in back testing with the EA, the yens were always the ones that would go wrong. Purely because the yen just gets into squeezes. So from a trend trader's perspective, it's a nightmare because it's incredibly difficult to get into pullbacks because you quite often don't get many pullbacks. And from a position trader's perspective, if you get into it at the wrong direction, you can get squeezed for weeks on it. So again, not great trading. From a mean reversion perspective, you can try and mean revert this thing until the cows come home and you will just lose and lose and lose. So the yens are just very difficult to trade anyway, unless you get into them at the right time and you hold it and you never let go. You know, you can make some really good money out of it, but it's just very difficult to trade as a position trader. So I very much limit my exposure on the yen. But it does react to support and resistance like any other pair. It's got the same characteristics. We still have support and resistance working. And we are just hitting a nice resistance area at the moment. So this was supportive, 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 resistive, resistive, resistive. Again, we've hit the resistance. Again, same here. Yeah, we'll get the reaction. We've had the reaction, but that reaction does not mean it's going to stop. So be careful, but it is at a nice level. Swiss yen, up in no man's land. Very difficult to trade that at the moment. It's an ADR reversal trade from yesterday. So yeah, not great. Euro odd bounced off the 24 beautifully. Shorts all the way on this one. Didn't get up to RSI, so I didn't get alerted to it. But yeah, nice looking short. We have just come back down into support here, which seems to be holding. We've had the reversal alert. We've pushed up into the 24 and back down again. So we'll see what happens with this. This might be a new peak formation low put in here, which is going to do that. If it does, though, when we get up to the 72, I'll be shorting that one. Euro CAD, same thing. Looking for shorts on it. That's not really anywhere of interest at the moment. Euro Swiss, just down. It did do something interesting yesterday, Euro Swiss. This is a broker candle. And the broker candle took out the lows of yesterday. I don't know if anybody else has got this on their charts, but we did come down and take out these lows, and then the market sort of pushed up from this area. So it's potentially looking like it wants to double bottom, but that would indicate that we're getting Swiss franc weakness. And all the other Swissy pairs kind of look like they want to power up. So I'd still be looking for shorts on this. So for me at the moment, if this gets up to the 24, I'd be interested in getting short, because if it gets up to the 24 and it manages to break it, look at all these selling gaps we've got here, which are likely to hinder it and push it back down again. And then we're going to get up to the 72, which will push it down. So I'm just looking for shorts on this one, on any pullbacks. But as I say, this one is a prime example of how difficult it is to get into Euro pairs at the moment. You've had 2 opportunities to get into this since October last year. But it's virtually impossible to hold it that long, isn't it? We're not programmed to do that. So, Euro Swiss shorts. Euro pound, as I said, Euro pound I'll be looking for shorts on as well. So I'm looking for pullback. This was making new lows. We haven't been down here for a long time. Going back to COVID, basically pre-COVID. So we're approaching pre-COVID lows at the moment. So yeah, down here, going down to here, and then we will see what we get here. We're either going to get a reaction. Highly likely we will get a reaction. But the reaction is probably just going to be a bounce and a drop. So more downside on that one. But look for short opportunities. So pullbacks. If we get back up into here, that's where I'd be interested in shorting. Euro New Zealand, nowhere. This one is just a nightmare. Sideways mess. I mean, at the moment, technically it's a long. I hate saying that about the euro. But the 72 is holding up nicely at the minute. But look at that rejection at the moment today so far. Just about to get a reversal alert on Euro New Zealand short. So, yeah, I wouldn't want to long it, put it that way. But this is the one I highlighted that we're in this control candle on here, these red lines. So this big up candle we had here, since we put that in, we never got out of this candle. We got out of it once, and then next day it was like, not interested. So we are still in there. So long it from the lows, short it from the highs. I would much rather short it from the highs than long it from the lows. So there's just no trading opportunity on that one at the minute, as far as I can see. Euro yen, yeah, lovely short. So when the yen does power up, the euro is
incoming mail
collapse the hardest. So obviously, as you can see, there's plenty of shorting opportunities on this. None of them have held because the yen is being squeezed at the minute. So look for areas of support and resistance on this one. This is the area I had drawn in from yesterday. If we can tap up into that ADR hit, then that would be a lovely area to short from. But apart from that, not really interested in yens at the minute. Euro US, big accumulation phase on the Euro US, mainly because obviously we've had the big accumulation phase on the Dixie. The Euro US obviously is a mirror of the Dixie at the moment. This is a good example of, and it shows you how weak and neutral the Eurozone is at the moment. The Euro is mirroring inverse every other currency. So when the US dollar goes up, this will go down. When the euro dollar goes down, when the dollar goes down, this will go up. If the pound if the pound pushes, the euro pound will move. So the euro is sitting there being kicked around by every other currency at the minute. So all you can really do with any euro pair is basically just go the opposite direction to the other currency when it wants to move. So US dollar, I am expecting to power up based on COT futures interest being long on it at the moment. And the US dollar is not doing particularly bad economically. I say not doing particularly bad. There's no plans for anything that is going to negatively affect the economy, put it that way. So I think basically we should get a good movement to the upside on this. This is a massive accumulation though, the same as we've seen on the Dixie at the minute. We're waiting for FOMC or non-farm payroll to kick them out of this range. And then we'll get some movement on the Euro US. Pound odd, not really anywhere interesting at the minute. It's in 61.8 retracement. Potentially a short. Nice rejection from the sellers here. So where we started this big move to the downside, this gap here is the selling pressure. We tapped up into that and it's being rejected at the minute. Pound CAD, beautiful rejection bounce off of the highs, off the support resistance. So this area here is absolutely perfect. Nice rejection multiple times there. We've tapped into it and rejected. Nice reversal alert, really strong reaction. We're just retesting the reversal alert at the moment. So continuation move to the downside. We've got any CAD news this week. We've got building permits at 1:30 this afternoon, and we've got employment on Friday. So Canadian dollar is going to have news on Friday. Building permits don't tend to do an awful lot. So the CAD, Friday. So if the CAD can push back up into this area, pound CAD can push back up into this area, and we get some decent CAD news on Friday, we could see a nice drop on the pound CAD on Friday, but not for me at the moment. Right, pound Swiss, beautiful 72 rejection going on at the minute. We've had some good strength into the 72, and it's holding really, really nicely. Whenever you see price move up and get stuck, just draw a line on the highs. Yeah. So the easiest way to do support and resistance trading, in my opinion, is not to draw the support and resistance in necessarily that you are thinking it's going to move at. See when price rejects an area and gets stuck, and then draw the support and resistance in at that high, and then go back and look left on your chart, is there any reason why this should be rejecting? Yes. Yeah. So at the moment we are at the 72, which is a strong rejection MA. We've got a negative bias on the pound, and we've got an area of previous support which it got smashed through, and this is the first retest of that support. So this looks like a really nice short opportunity at the moment as well. So drop down to lower time frames. We had a reversal alert which is triggered by a broker candle, so probably just go up to the 30. Yeah, I had it there as well. So hourly we haven't. So we're just stuck at the minute in this area of consolidation. So likely we're going to get a nice push down. So difficult really. I would probably go a pending sell order just under the London lows today, and this is really the Asian low. I mean, this is the Asian low here, really. This is a broker candle. This is just nonsense. So there is where I'd be looking for potential sell opportunity, and then, you know, where it's going, who knows? Could come all the way back down to these lows, couldn't it? The pound. It's difficult to know what's going to happen with the pound at the moment. Market is short on it, although it is grinding at the moment fairly high. So the pound Swiss, pound New Zealand, that's rejecting at the moment today. There's not really any level of interest there at the moment. So we've got this big propulsion candle here, which, as I said yesterday, was in a range. So I like propulsion candles that come out of a range. The move that actually makes the break, those are the ones which you tend to get the best selling pressure at. Prime example of it here. Yeah, this move outside of this range made this gap here, which market moved back into, and the sellers went, nope, not going any higher. Whereas this one was within this area of balance here. So this is going to be less impactive. So pound New Zealand is not really anywhere I'm interested in at the minute. Pound yen we know about, massive short. God, I'm so tempted to take it. I really am. We've had the reversal alert and the retest, and it looks heavy. It really looks heavy. I've just got my spider sense. Batman hasn't got sense, has he? No. Spider sense is tingling on this one. It's just the yen. I just don't trust it at the minute. But that is a hell of a squeeze. It's a 2-week squeeze, and it is going to collapse at some point. We're going to get a huge yen push. I've just got a feeling it's going to be Friday on non-farm. I think that's when they're going to start the move, but they may start it prior. And it's that whole fear of missing out thing at the minute on this one. What I'm going to do is I'm going to go with a sell stop underneath the lows. So when we get this reversal alert on the hourly, I'm going to take it and I'm going to monitor it closely when we get to the 61.8 retracement. The thing that concerns me about the pound yen is this area here. We pulled up into this, we accumulated, dropped, took all the liquidity here, and then we came back up, and that is that propulsion candle here that made this gap is the breakout of this high, and it didn't stop. We haven't come back and tested it, so if we are going to get the reversal alert here, this is the area that I would be thinking, right, this is likely where we're going to bounce. It's the 61.8 retracement. So if the yen is going to continue to weaken and we're going to get continued strength, that is where I'd be looking at scaling in if I was going long. But the fact that we've had such a strong move without a profit take here, we're more than likely going to get this kind of reaction. Market structure shift from a high. So that's what I'm expecting to get. So if you look at it from a market structure perspective, long term, high, low, lower high, lower low. And considering the US dollar is likely to power up, the yen will quite often get dragged with the US dollar, in which case then we will see a power up on the yen. We've got a weak pound potentially as well. So there's good potential move to the downside on this long term. So I'm happy to take one on it. Might eat my words on that tomorrow, but Look at where we're going though from a scaling in perspective. So when I'm getting into positions, I'm looking at what's going to happen next. So if I'm right, brilliant. If I'm wrong, where am I getting in next? Here. This is 125 ADR move today. Would be second entry on that one. And there's just, if it gets up to there, if this is a pause and a flag and we are going to push higher, this thing is going to be putting in somewhere in the region of a 9 ADR move from the lows. So up here would be 870, which is, on a 120 ADR with sort of 7-8 ADR move to the upside with no profit take. So there's going to be a big move down on this. I just get the feeling you're not going to catch it. If you don't get in now on these things, you're going to miss it, because the propulsion candle that comes in is going to be something like this over a 4-hour period. And by the time you've seen it, it moves over. But obviously, if it does happen, you can catch the retracements and drop it back down. So pound yen, just really like it. Just from an extension point of view, when you see the RSI do this, and get embedded for such a long time on H4, you just know it's coming at some point. So short. Pound US, not really anywhere interesting at the moment. Expecting US dollar strength. We are coming up actually to potential resistance here. This has been fairly resistive, this area, in the past. We've got another resistive area coming up there as well. So this area here, where we had nice balance, and then this area here where we rejected multiple times, and this obviously rejected in that zone. So this is your support and resistance zone here. Also coincides with a nice big gap. So if we can get up into there, that'd be beautiful, which is why, as I say, I'd like to see the US dollar weaken further this week, so we can get all these pairs pushed up into these nice areas where likely we're going to get selling pressure coming in. New Zealand dollar CAD, not really anywhere I'm interested in a minute. New Zealand dollar Swiss, again, just a short. I just can't. This is Swiss franc driven at the minute. It's just a horrible consolidatory mess. New Zealand US shorts, we've just had a reversal alert on that one, which is just retested at the 24, but it's after this consolidation. So if you look at the consolidation, sort of around there-ish, we haven't really broken out of it. So all that we've done here is just basically put our heads below the lows, and now we're back in there. So we are still really in a consolidation. Until this breaks back down below here, that is when you would expect it to continue short. But if you're preemptive and you're getting in, we've had initial reversal alert. We are now back up and retesting this gap that was formed, and we've rejected it twice. So sell order below there, below this candle where we are now. If this is going to go, it's going to go very soon, and it's going to be a 24 bounce. But we are just stuck in a consolidation, so there is an opportunity for this to continue as it is. If we are going to get this US dollar move, obviously, again, it's just going to come down hard. So for me, this is in a nice shorting area at the minute. New Zealand dollar yen tapped up beautifully into the gap, but there's not really any. This is a really hard one to draw support and resistance on. There's so many levels this thing could react from. We are at one at the minute, but is this the one, or is any of these the ones? So for me, probably something like that, but I can't really trade that at the moment. I don't really know what it's doing. US dollar CAD, nice bounce off of the 72, and that's looking like a nice little long. US dollar Swiss, US dollar Swiss is a bit of a mess. This tends to, a lot of the time, follow what the Dixie's doing, US dollar Swiss, because the Swiss franc, when the Swiss franc powers up or weakens, is incredibly strong in the way that it does it. So it tends to push the US dollar around as much as it likes. So whatever the US dollar is doing, if the Swissy has a power up, the Swissy will just make it a choppy mess, which is why it is what it is, which is why I don't really like trading it very much. But we're in a range at the minute. We're kind of towards the bottom of the range. But look at the wicks. It's just a horrible thing to trade. So not really interested. And US dollar yen we've looked at. It's coming down very nicely at the moment. So this area is where you want to be looking potentially for a bounce. Failing that, we've got this nice area consolidation here. We've got one here. So that will be a 38.50 retracement. So if this continues to the downside, get ready for that for non-farm or FOMC or whatever happens with the yen. GJ 4-hour cup and handle. Oh, blimey. Don't do those patterns. Far too complicated, personally. But if you can see a 4-hour cup and handle in there, great. It's like the old head and shoulders patterns. Head and shoulders and those sorts of complex charting patterns, they are very, very difficult to trade. Everybody goes through a process of trying to trade them, and I just find them incredibly difficult to, first of all, identify. They are very subjective. You tell 3 people to find a head and shoulders, and you'll probably get 3 different patterns picked out. It's got to be really, really clear. I mean, there's head and shoulders all over the place on this chart now, but most people won't be able to find them. If you switch this over to a Renko chart, you'll spot them like a, it's really, really easy. So if you're going to trade patterns, I would go with Renko charts, because Renko charts will identify those types of patterns incredibly easily, and they're great for longer term trades. So, but yeah, not for me. I can't really trade them. I've tried many times. I've tried everything. I've been trading 13 years. There's nothing I haven't tried. There's very little I found that works. Kenneth wanted to know about the moving averages. So these moving averages that I have on my chart are the, let's find a cleaner chart, which I haven't got millions of lines on. Just take the ADR indicator off on the hour, on the daily, so we can see it. So these are the 24 and the 72 moving averages. So this one obviously being the 24 and this the 72. Basically, the reason I use those is these are the kind of what I call the institutional moving averages. So institutions and large funds work on a monthly and quarterly reporting basis. So you have targets and goals to hit every quarter and every month. These represent those periods on a daily chart. So there's 24 trading days in a month, and there are 72 trading days in a quarter. That includes Sundays. Sundays are a trading day. The market is open on a Sunday, and they are included in reporting. They are included in charting as well. So although most of us completely ignore them because there's only a couple of hours, but there's still a couple of hours of trading. So that's the reason. If you wanted to, you could use the 20 and whatever that is, 60. But these are the ones that I've used, and they work incredibly well. So I've got what's a shadow, basically. There's moving average indicators out there that will paint a shadow on the chart as well, and it's literally a case of if it's green it's going up, if it's red it's going down. Very, very simple. You can see in things like the S&P, you long it, you always long it. But you can see how well the 24 and the 72 work, especially on indices, which obviously are stock related. So we pull up and we bounce off around about the 24. If the 24 fails, we use the 72. We bounce off of the 24. If that fails, we use the 72. 24, 72. But this is a zone, and it's not. with any moving average you use, and this is the problem with moving averages, with any moving average that you use, people will always try and find the best moving average, and they curve fit a moving average to a chart. So I can always change my moving averages to make price bounce off of the moving average perfectly, but that's not what price has done. What I've done is curve fitted a moving average to match a chart. And that's not what you should do. The reason these moving averages work so well is because they are based on periods that are traded by institutions and banks. And they have they use price movement over those periods. So this is why they work very well. So in an uptrend, you'll get a pullback to the 24, but you can use the 20. The 20 works just as well, the 20 period moving average. But what I do on the 4-hour chart is I extrapolate those into the 432 EMA, which is equivalent to the 72 EMA on the daily. And the 144 EMA on the 4-hour is equivalent to the 24. So when I zoom down into a lower time frame, I can actually see the 24 and the 72 moving averages, and you can see how well they are respected. So you can use them from a scalping perspective, even if they don't hold. Like here, for example, it didn't hold. Price pushed up and came up to the 72, and that's where we got the reaction. But even if it doesn't hold, you will typically get a reaction at that point. So we pulled up to here and we reacted off of it. We pushed up above it and reacted off of it. We pushed into it again and reacted off of it. So if you want to use these for lower time frame trading, for scalping, or for just short-term movements, they're very, very good to use. So if you look at that area here as an example, if I just draw a box around that area, so we hit this 24 there. Oh, hang on. So up until that area, really, wasn't it? So if you drop down, what date is that? 15th of December. Yeah. So this is the hit on the 24. Yeah. So you can use it on lower time frames. So you will wait until we get around this area, and you'll wait for a reversal alert. So you would have got a reversal alert here. Hang on, where are we? There. You'd have got a reversal alert there. That candle there, that low, you wouldn't have got one there. You might have got one there. You probably, yeah, you would have got an alert there, and you'd have got an alert there. So this is where you would have taken your shorts. Yeah. And if you're using a stop loss, risk reward is nice and big. So you always get that reaction. So this is the second tap into it and the reaction out of it. So you can use it for scalping as well, but from a position trading perspective, which is what I do, I use them. Let's try and take that off. I use them for areas of interest. So for me personally, when we get an RSI extension, i.e., a strong move that takes us into a moving average that may well also coincide with an area of support, resistance, or balance from a previous time, that is when I'm looking for shorting. Again, we pushed up, we got an RSI extension at the 72, which also happened to be a beautiful area of potential resistance. Yeah, remember, all support, resistance, supply, demand, whatever you want to use, whatever you want to call it, it's all only ever potential, which is why I position trade, because if I'm right, I'm right. If I'm wrong, I go to the next potential area, which is typically right. If I'm wrong, I go to the next potential area, which is typically right. It's just a case of scaling in until you get that reaction from the market. And if the market is extended and doesn't do a full profit take, it will get a full profit take at some point. And that is where we exit the positions. So, yeah, basically that's why I use those. But use a 20. I would say stick with the. a couple. There's a lot of systems and strategies out there. You use lots of multi moving averages. There's ones that use 3 moving averages. There's systems and strategies out there that use like the Gator that uses like 10 or so. But at the end of the day, the more you have on your chart, the more over trading you will do. So if I have, for example, 100, a 20, a 50, 100, and a 200 on here, there's 4 opportunities for me to get into trades. So I'm going to play the 20 bounce, the 50 bounce, the 100 bounce, and the 200 bounce. If I'm wrong on all of those, that's 4 trades I've lost. You're better off just using a couple of moving averages and use them as an area. Again, there is nothing that is exact. You will find instances of support and resistance that are to the pip and are exact. But most of the time, a support and resistance is a zone. It's an area that price rejected. Yeah, and it doesn't hit to the pip. Everybody's always trying to get it to the pip. Oh, like this didn't hit to the pip. Let's use the 20. Oh, look, the 20 hit to the pip. Next time, the 20 will miss completely and you won't get into that position. Yeah, you can't have any indicator that is exact. They are just areas. They give you places of potential trading opportunities. So, that one worked beautifully off the 72. That one didn't. Yeah, but it provided lovely support moving forward multiple times. Yeah, until it didn't. And then it didn't again. And then it came back through and pushed up and it did. So you're never going to find anything that's going to be exact, which is, again, why I trade the way I trade, because I know that when the market has done that, at some point it's got to do that, because every person that hits the buy button has to hit the sell button to get out of their position. If there's that much buying pressure, these guys want to get out of their position, so they've got to sell, yeah? Which is why you get these cycles of buys and sells. Buys and sells. Buys, and we're in a sell. Yeah, all these buyers have got to get out of their positions. All these sellers have got to get out of their positions. Yeah, that's the way the market works. It's buying and selling. If you enter 1,000 contracts long, you've got to get out of 1,000 contracts. And to do that, you've got to hit the sell button. And this is why the RSI works so well. And what I look for with the RSI is I'm not looking for it to go, oh, it comes up above there and then it crosses down below there and that is my entry. That's not the way I use the RSI. I use the RSI to show me when there's been a lot of one-directional trading, i.e. there's been a lot of sellers. So there's a strong relative strength. There's a strong selling move, which then will need to be undone by a strong buying move. And when that strong buying move is complete, it will need to be undone by a strong selling move. Yeah, so we don't go higher, we sell. We don't go higher, we sell. We don't go higher, we sell. And this is just the market getting out of those positions that it scaled into here. And which is why we use the accumulation phases to predict when the next big move is going to come. When the next big move is going to come, what they will do is they will make a propulsion move, which will leave an area we can identify as selling. So this gap here was selling pressure. So if price moves back up into here and this move is not complete, the market will continue. They will scale in. So think of it as if you're an institutional trader, yeah? Here, you have entered 1,000 contracts long there with your target up here somewhere. Yeah, market moves up to there and doesn't get to your target. Right? When it comes back down to here, you haven't got out your position yet. So you've got 2 options. You can either get out your position with a loss, or you can defend this position and push the market back up again. Enter more positions. And now, because you've got twice as many positions in the market, your target doesn't have to be up there to make the same amount of money. It can be down here. And that's where the market exits. As you exit your 2,000 contracts you've got now, you create a selling frenzy. Yeah, there's only 10 big banks that produce 70, 80% of the market movement. Yeah, so there's only 10 participants really that are moving this thing. We haven't got a chance. We can't enter contracts big enough to move the market. If we all press the buy button right now and there's 2,000 people in this room, it wouldn't bat an eyelid. Yeah, So all you're doing is you're playing off the back of what the market is doing. And all you need to know is that every person that buys, when I say person, I mean institution that buys, has got to sell. So when they've done a lot of selling, in this case here, they've got to do some buying. When they've done a lot of selling here, they've got to do some buying. And after they've done, if they've done selling, then they might do more selling. But eventually, they will do that. Yeah. So it's just buying and selling. And all we're doing, or all I'm doing, is when we get to these areas, I scale in. So I'll go long because I'm expecting them, after doing that, to do that. If they don't, and they do that again, I'll get in again down here. And when they do that, I'll get out of both those positions and make money. That's it. Simple as that. Really easy. It's not a complicated strategy, not a complicated system. If you haven't watched the Bootcamp videos on YouTube, go and watch the Bootcamp. It's a 5-day, or say 5-video series, basically how I trade, which is position trading, which is different, obviously, to using a stop. I'm scaling into the market on market moves, on market structure, and waiting for the market structure to play out to bank the money. And obviously the moving averages are, a decent part of the strategy. But I use COT bias obviously a lot as well. So COT is fairly important because I want to enter in the direction of what the market sentiment, the overall institutional market sentiment is, ideally. And if that matches with a moving average hit and an RSI extension at a previous gap, i.e. area of selling, brilliant, I'm in. And then using the market reversal alert indicator and the EA to manage and take the trades for me. There you go, there's a recap. So that was a long-winded way of explaining the moving averages. But hopefully that explained it. Okay, so that's basically all at the moment. Did I get into a position? Yeah, I'm in short on the Aussie New Zealand. So I got in short on that Aussie New Zealand. We are so we've just pulled down. We're retesting now this area. So we'll see if we get the retest and the drop on this one. Let's look for sort of 25 pips on it, a little short. Okay, anybody got any questions or anything else they want to discuss? What's time? 9:45. I'll be back on at 2 o'clock this afternoon. Do a little bit more S&P and NAS. Say S&P and NAS. I really only trade S&P. I only took NAS trades yesterday because someone was into trading the NAS and I was watching it. But yeah, at the moment we are pushing up again during the London session. But we are just tapping into all this selling pressure from the sell-off from yesterday. So I don't really tend to get into many positions during London because obviously New York is where the vast majority of the sorry, just massively maximized my screen there. So yeah, it's obviously the majority of the price action, as you can see by the session indicator, tends to happen in the New York session, especially yesterday, obviously. So today, obviously, we'll see what we do with New York Open. But if we can get a further push down today on these, it'd be nice looking long opportunities to get into. So we'll see what happens. Okay, so I'll be back at 2 o'clock. If you need anything, come into the Telegram group. And obviously, let me know if there's anything you need in there. Otherwise, I'll be back at 2 and yeah, we'll do another recap of the market, see where we are, see what's happened during the London session and get prepared for New York. Just be aware, obviously, of news. We've got 115. Sorry, 115. We've got employment. So that will happen before the New York session. So just keep an eye on that. That may well have some impact. Lorraine's just asked about COT data. If you go onto the Market Structure Trader website, if you want to get the COT data yourself, there's a link there to the CFTC. That's where you actually get it from. That is the Commodity Futures Trading Commission, and you basically just download it. The one you want to download is the Futures Only report. which is this one. And that will give you all the data. But if you just want to see the data, it's updated every week on my site. But this measures the kind of percentage long versus short, which is the bit that I'm interested in. I want to know what the market positioning is on it. Okay. But go and have a read up on it. So try not to pay too... I use COT, obviously. But have a read up what it says on here. It's important. COT is not a timing tool. What we're looking at here is positioning, which they are expecting to profit on in somewhere between 1 to 3 months, i.e. 24 to 72 days. Funny that. Why I use those moving averages. These are long-term positions. So this is, we could have US dollar long versus pound short, i.e. going long US dollar pound and short on pound. We could do that for 6 weeks and it go completely against us because they won't move the market in that 6 weeks. They'll be accumulating and dropping the market, whereas we're expecting it to rise. This is a very long-term view. The reason I use this is because as a position trader, if I get into a position wrong, and I get into some deep drawdown on it, I want the market bias in my direction. If I get into a deep drawdown position and it's against what the market is expected to do, I'm in more trouble potentially than I would be if I went in line with this. And this does, you can look at this and pick any of these dates and go, right, well, on that date, on the 26th of October, that week, the US dollar went down continuously and the CAD went up dramatically. Yes, it can do. Doesn't mean that US dollar CAD is going to go up just because this is green and that is red. It's got nothing to do with it. It means that overall positioning is expecting this to happen and this to happen at some point in the next quarter. The actual veracity of that movement has got nothing to do with the numbers either. It's literally just another confluence to add to your trading, but you don't have to use it at all. Yeah. I didn't use it for a couple of years. I didn't use COT. I just ignored it. But what happened was, this was about a year and a half ago, I got squeezed multiple times on multiple pairs at the same time. And I was like, what on earth is going on here? This is just never breathing. And when I looked at the COT report lined up exactly with the opposite direction to my squeezes. And I used to use a COT report many years ago when I was trying to trade market sentiment, which was virtually impossible. And I just decided to add it back into my sort of accumulation of indicators to go with the strategy. But it's not the end of the world. If you're trading M5 and M15, forget COT. It's got absolutely nothing to do with it. It's irrelevant. Don't use it. Don't have to use it at all. But I just found that trading in line with COT bias, if you do get into trouble, will help you get out of trouble more, because your expectation is at some point for a big move. And when you're expecting that big move, you tend to scale in accordingly with that big move after a while. But as I say, don't read too much into it. If you're trading anything low time frame, even hourly to a certain extent, the market can go up and down, up and down, up and down. Look at this move here. Well, let's not look at that one. So let's pick pound US as an example. So the pound is a short, and the US is a long. So the pound is a short and the US is a long. Brilliant, that worked. The pound is a short and the US is a long. That's not right. That's not right. That's not right. It's got nothing to do with COT at all. That's got nothing to do with COT. This big move down. This one here in London. It's nothing to do with it. This is a massive accumulation phase before the breakout. It's a range. Yeah. COT is irrelevant. Totally irrelevant. But if you are taking a position on pound US dollar, I want to be taking shorts more than longs. And this is the perfect place I want to be taking shorts. Yeah. So if I got in here and I had to get in again here and I had to get in again here and I had to get in again maybe there, it's probably a bit too tight, but I might have done that. I'm expecting the market to do that at some point. And the other thing backing this up for me is this is a massively strong move with hardly any pullback. Yeah. So I've got a massively strong move with hardly any pullback and profit taking. I'm expecting all these buyers to become sellers at some point, and the futures market is also saying that is the direction that it wants to go. You know, it's just another thing. Think of it like a solicitor. You've got to build a case for taking a trade. It's just one of my pieces of evidence. Yeah. Okay. I'll probably try and do a video on the COT because I do get a lot of questions on COT in Telegram as well, and I haven't really done a lot on it because it is so complex, and it's economics basically, and it's how the market positions itself based on fundamental analysis. This is what all the analysts in hedge funds and everything do. They have a scorecarding system where they will use commitment of traders as part of that, but it's just super high level. Think of it like space shuttle level, looking down on the charts. That's COT. Yeah, most of us aren't going to become astronauts, so it's not 100% relevant. Okay, I'll leave it there today. Anything you need, let me know. Come into the Telegram group. Otherwise, hopefully we'll see you 2 o'clock this afternoon. We'll see how the market gets on, and have a good afternoon.